You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today's Tuesday, 16th day of June, 2020. All right, let me give you the numbers from around the world. These are the cash markets. Let's open with a word of prayer. Father, we thank you for your blessings, for your mercy, for your grace. You're so good to us. You've done so much for us. God, let me just ask, what can we do for you today? That's our goal, to make you smile. In Jesus' name, amen. All right, here we go. These are the cash markets starting here in the U.S. Dow currently up 408 points, 1.5%. NASDAQ up 126. S&P 500 up 45, 1.5%. Russell 2000 up 35, 2.5%. In the commodity basket, crude oil up 8 cents, trading 37.20 last. Gold up $6.40, trading 17.3360 last. In the Asian markets, At the close, Nikkei posted a gain of 1,051 points, almost 5%. Shanghai gained 42 points, 1.5%. And the Hang Seng up 567 points. That's a gain of 2.25%. In the European markets, at the close, FTSE posted a gain of 178 points, that's 3%. The DAX up 404 points, 3.25%. The CAC up 137, almost 3%. That makes for a green day in Asia, green day in the UK. And yes, it's a big green Radio Tuesday here in the US of A. Let's go to Michael, get a recap of what happened this morning in the live trading room. After that, I'll be back. And we'll talk about the Concierge Trade Alerts. We'll talk about the Logic 247 alerts. All that. Answers to your questions. When I return. Michael, take it away. Okay. We don't have a Michael.
Nope, he's not in.
All right, could you message him, Valerie, and ask him what's going on, please? Thank you. All right, we'll take a look at the daily chart here for a minute until Michael shows up. We know that we had our bearish cross back on February 27th, which sent us to the pandemic low, March 23rd. Price ran up to the BBC where we expect resistance. Resistance sent us back to support at blue and climbing. This was the key day right here when we closed back above the BBC. That gave us a leg and a retracement, a leg and a retracement, a leg and a retracement. Big leg. We were anticipating this resistance long before we got there because it's market structure. It's just how markets work. When we hit resistance, that sent us back to the BBC and incidentally also a 24% Fibonacci retracement from the low to the high. Support at the BBC and the Fib sent us back up to red and falling where we anticipate resistance, which is what we found. What will be critical in today's, the remainder of today's session, can we close above red and falling? If we can, then we're dealing with this same area of resistance again. That could become a double top. If we're able to overcome the previous resistance, then the next area of very important resistance is right here where the bearish cross took place at 32, roughly 72. Okay? It's an area. It's always an area, but you see this area where the bearish cross happened. If price can overcome red and falling, then it has to overcome the previous swing high. Then the next obstacle, which I think will be difficult to overcome, unless there was some kind of exogenous news event or something miraculous happened, they find a cure for the coronavirus. I mean, I think it would take something big to blow through this area, just as price was unable to blow through this area. Okay. If we get a close back below the BBC, all right, then the first area you should look for as support would be at the swing low. Let me put those fibs on for you again. Okay. See the 24% fib right here? The price came to rest on. So back up to resistance. So if this resistance holds, first step, price gets back below the BBC. Then price has to get below not only the 24% fib, but also the swing low put in yesterday at 29.2375. So let's say we trade down to 29.10. Then the move is on to the 38% fib, which is down around 28.20. So that's about almost 100-point drop. If this holds as resistance, first step, resistance holds. Second step, we get below the BBC. Third step, we get below yesterday's low. And then this area here represents about a 100-point drop in the S&P. That's 1,000 in the Dow. The low of this candle, 23.75. So look at an entry down, maybe say 29.10, because you want to make sure that you're getting below that area, not just spiking it. So even take it down to 2,900. You know, be very conservative and call that a 50-point drop. That's 500 points in the Dow. But keep in mind the things that have to be done and overcome in order for that to happen. Okay? All right, still no Michael?
No, Michael's here.
Okay, all right. You ready to take it?
Yep.
Okay.
I am ready. Here we go.
Okay, it's all yours. Locked and loaded.
All right, thanks. Yeah. There we go. Okay. So, good afternoon, everyone. Today is the 16th day of June, 2020. If you have not taken a free trial with us and you want to take a free trial with us, go right down here where it says, go to the homepage at CFRN.net, and then go down here where it says free 5-day trial. Click on that. It's going to bring you to this page, EminiTradingSchool.com. And on this page, all we ask for is your name, your email, your phone number. You can tell us your biggest trading challenge, so we can tailor one-on-one training just for you. And we really do one-on-one training. Hit the send button. You'll be sent a confirmation link. Okay, you must click on the confirmation link. If you don't click on that link, we don't know that you took the free trial. The spreadsheet. Let's see. Today, as I said, well, first of all, if you're going to read the spreadsheet, read all the CFTC risk disclosures down at the bottom. Today is the 16th day of June, 2020. We lost 8 ticks in the euro, made 3 ticks in crude, 10 ticks in gold, and 12 ticks on the ES. Put us at plus 230 on the morning session. Today, it took 16 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 8 trades this morning. There was so much happening this morning. When I get into it here in a minute, the markets have been just crazy. So on the month now, we're up $3,654. That's over 12 trading days, averaging $304 per day per contract for 2 hours. And I miss most of the trades, as you're going to see. On the year, we're at $40,069. That's over 109 trading days, averaging $367 per contract per 2-hour trading day. Now, I'm going to have to back these out, okay, because there was just so much. Right here, is where we got our goal for the day on our first gold trade. Okay, now, no, I don't want to do that. Do the other. Okay, that's where we got our goal for the day. Now, after that, let's see. We need to establish a trend, and we were choppy right there. Doing the YVR trade, you would have been short right there. Short again there. Short again there. But doing the trades that we do in the trade room, you would have been short right here. Okay, and again right there. Then it flipped around, and you would have had a YBR long right there. That would have been a break even, but another YBR long right here that would have captured that long. Another one right here that would have captured that. But the trades in the trading room, let's see. The YBR short right there. YBR long right there. That would have stopped out. Here, the trades in the trading room. There was a shorting opportunity right there. This would have been a down close below the trend line. Let me draw the trend line for you. Okay, right there. Close below the trend line. And there was a long here that we missed. Short there, short there, short there. Missed them all. Skipping over the YBR stuff right now. Just wanted to show you a few examples of it. And gold just started to run. And it's doing a bit of a retracement right now. Okay, but there was a long opportunity there. Let's see, a short there. A short there. That was during the break. And that was it for gold. So, you know, our goal here, well, our goal, your goal should be just to get your goal for the day. You know, not to trade 100 times. Just get your goal for the day. All right. And that happened way back here. Got the goal for the day right there. And, you know, then you put your mouth and you just watch. And actually learn and get it ingrained into your mind that the same thing happens over and over and over and over and over and over. And learn how to do that one thing. You know, it's like walking. It's the same thing over and over and over. Every now and then you're going to stub your toe, but you know how to walk. All right. So on the euro, we stopped out on the first trade. And on the second trade, we had a break even right here. Okay. The euro wasn't very giving this morning. There was a short right here and a long right here that we missed. And then we got into the break. And there was nothing during the break. Well, right here was a long, right here, just a few minutes ago. But it was going into the high of the day. Okay, on crude. Wow. Yeah, I can't believe we didn't make more money on crude today. But anyway, there was a long right here. Another long right there, though the cycle was questionable. A short right there. And we had this huge move down. Now, this all happened so fast that, you know, I was probably talking about something else because I'd already gotten my goal for the day. But we had this huge move down right here on crude. And we could have picked that off right there. And we had another one there, another one there. And right over here, we picked up 3 ticks. No, I'm sorry, we had a break even there. We picked up 3 ticks here. Moving on. And that was it for the morning session. And during the break, no, we didn't really have anything. Okay. The ES. No. This one I'm going to have to back out. Because it has been all over the place this morning with Powell testifying. See, all those bars are just the last half hour of the morning session. Okay, here we go. All right, so we started out right here, with a long opportunity. Okay, now I missed that one. And then we had a shorting opportunity right there. We had a break even right there. We missed this short right here, which is just too bad. But it was going really fast. That's why we missed it. We picked up, 8 ticks right here. This is where we got our goal for the day. We picked up 8 ticks. Oh, no, that's not where we got our goal for the day on gold. We picked up 8 ticks right here. And then a couple more right here. And this was a close above the trend line. This was a close above the trend line. Okay, now the trend lines. Dwayne, I'll address that in a minute. Okay. Right here was a shorting opportunity. Sadly, we missed. And along here. And, you know, I'm not going through the YBR stuff with every market, but the YBR stuff remains the same. Right here, we had blue, bullish, up, red, bearish, down. Okay. Then right in here was when Powell started. I think it was when he started speaking, right about this time. And you see, if you look down at the bottom, 1037 to 1040. This is 3 minutes worth of bars right here. So the markets just started going crazy. And at that point, yeah, I was pretty much done trading the ES. There were some great opportunities right there, but you had to be on your game. You had to be on top of it. Okay. We actually took that one. But you had to be on your game. And, you know, at one point my DOMs weren't keeping up with my charts. So there was only so much I could do. But, I mean, look at this move here. From 11:01 up to 11:06 in 10 minutes. Not even 10 minutes. In 5 minutes. It ran from way down here. Hang on. Come on, charts. There we go. It ran from way down here. It's 71 all the way up here to 93. So 22 points. You know, we continued up. But so the ES was just a little bit crazy today. here, we picked up 2 ticks on this. 2 ticks. And we had a break even right there. Now, there were a ton of trade setups, but the market was moving so fast that if you're trading multiple markets, there's no way that you could have kept up with everything. And I mean, I couldn't. And, you know, if I can't, then it's likely that most everyone else can't. During the break, this is all during the break. There was a short here. And it's still going on. And that was the morning session. It was just crazy this morning, guys. You know, when we say, get your goal for the day and put the mouse away, that's what you should do. You know, it's exhausting. If you try to do everything, you're watching everything, and you're trying to do everything, it's just exhausting. So get your goal for the day, put the mouse away. And I got my goal after the first 16 minutes. I can't put my mouse away though. So I gotta go through it all with you. But that being said, today was a great trading day. There was a ton of opportunity. A ton of opportunity. All right. Dwayne. I'm gonna put you on my list. We're gonna have to set up a meeting to see what the heck is going on with the other Dwayne. Dwayne in. We're gonna have to set up a meeting, okay? I think that's the best way to handle this. All right, with that, let's go back here to the spreadsheet. Now, again, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 16th day of June 2020. Believe it or not, we're halfway through June. We were minus 8 ticks on the euro, plus 3 ticks on crude, plus 10 ticks on gold, and plus 12 ticks on the ES. Put us at plus 230 on the morning session. Today, it took 16 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. We took a total of 8 trades on the month now. Yeah, Lee, I'll give you a link in a minute. On the month now, we're up $3,654 a contract. That's over 12 trading days, averaging $304 per contract per 2-hour trading day. And as you just saw, I miss most of the trades. You know, I get my goal and then I go into training mode. And I'm not so focused on trading. You know, and all you guys, you always ask me, you know, do I trade outside the room? Well, yeah, but you know, I schedule meetings and all that stuff with you guys so that I can get a little trading time in on my own. You know, where I'm just trading, because this morning it would have been incredible. You know, I'll show you in a minute. Well, in less than a minute. Anyway, on the year, we're at $40,069. That's over 109 trading days, averaging $367 a day. You know, I get into a zone, and was it this month? This month, during the room, I focused on trading. And it made $1,700 a contract. Okay. Now, if you have not taken a free trial and you want to take a free trial, go to the home page at CFRN.net. And right down here it says free 5-day trial. Click on that. You'll be brought to this page, EminiTrainingschool.com. On this page, all we ask for is your name, your email, your phone number, and you can give us this information if you want to. You don't have to, but you can. And we really do the one-on-one training. Hit the send button and you'll be sent the confirmation link. And then we'll have a little information to start with the one-on-one training. Okay. All right. And Lee, let me send you that link. And with that, I can pass it back out to fabulous Phoenix, Arizona, overlooking South of Mountain America's largest city park. Dwayne, if you are ready.
All right, guys, we're going to move through this pretty quickly. Okay.
Here comes the link.
You can see my charts. All right, recap of the recap.
Today it took 16 minutes and one trade to get to $100 per contract.
Good job. All right, guys, we've already talked about the daily chart. We know that we're up against resistance here at red and falling. If we can get through red and falling, our obstacles overhead, previous swing high, which is the resistance we anticipated. If we can get through that resistance, the next area of resistance is where the bearish cross took place. There's only one other way that this unfolds. We either break that swing high or we break this swing low. We could go sideways for a day, for a year, but ultimately, price is going to attempt to break this high and succeed or fail. It's going to attempt to break this low and succeed or fail. It's that simple. Don't make it any more complicated than that. If red and falling holds as resistance, and we take out the BBC, step 1, take out this low, step 2, you got a nice 50 plus point window of opportunity, because if we take out this swing low, then price is setting its sights on this swing low, but we recognize there's a 38% Fibonacci retracement between this swing low and that swing low. Okay? All right. Concierge, or logic alerts so far this week. We're in week 98. Yesterday at this time, we had a total of 18 alerts. We were waiting on 8. We had 10 actionable alerts. Nothing had been stopped out, which it's not an average week, 0%. That only represents one day, the first day. We start Sunday night, 6 p.m. Eastern. And the Logic 247 channel is open until Friday afternoon at 5 p.m. Eastern. In the Logic channel, alerts are issued based on one criteria: when opportunity presents itself. Logic alerts are based on current price action. The concierge alerts, which we're going to look at in just a second, are based on previous price action. When current price action and previous price action point at the same important price, important area, that usually deserves a second look and quite often leads to a high probability, low risk trading opportunity. So today we're at 34 compared to the 18 we were at yesterday at this time. Still waiting on a disposition of 6. That gives us 20 actionable alerts. So Val, I'm confused. 34 total, waiting on 6. 1 was stopped out, that's 7. So that should be 24 actionable alerts. So I'm sure you'll straighten that out. So we're looking at 1 stopped out so far. There's 18, 19, 20, 20 actionable alerts, but I'm sure it's my math that's off, not yours. 20 actionable alerts. I'm just going to read you the recap the way I got it. 18, 1 stop out, 5% of actionable alerts stopped out. Okay. Now, I'll walk you through what those alerts have looked like over the course of the week so far. We're 2 days in. We are in week 98. Week 97 had a total of 88 alerts, 22 never triggered, 66 actionable alerts. 7 were stopped out based on not risking more than $300 per contract per trade. 11% of actionable alerts were stopped out week 97. That's not a normal week. A typical week is 20%. Okay? Which brings us to week 98. The first alert coming out of the gate Sunday night was Crude, followed by the S&P, followed by the Dow, followed by the Russell, followed by the NQ, followed by gold. There's a hedge on the S&P that found its target. Hedge on the Dow, same thing. Hedge on the Russell, same thing. The hedge on the NQ never triggered. This S&P never triggered. This Dow never triggered. This Russell never triggered. This NQ never triggered. This gold, this crude. This hedge on crude found its target. No trigger. This is the one we had a PT on. Okay. S&P. Number 4079 stopped out. Russell, long, NQ, long, S&P, long, Dow, long, crude, long, gold, long, Russell, long. And now this NQ, guess we're waiting on a disposition. I think that one's already been answered. There's gold, S&P, Dow, Russell, NQ, crude. So we're still waiting on dispositions for those. Now, I'm going to bring up the Concierge Trade Alerts. If you want to grab a screenshot, feel free to do so. Okay. Got them out last night at 6:45 p.m. Eastern. Globex opens at 6 p.m. Eastern. I do my best to get them out as close to the Globex open as I can. If you want to grab a screenshot, now would be the time. Okay. And then we'll go to the 30-minute chart and we'll walk through these. Okay. S&P 30-minute. Concierge Trade Alert. Consider being long, 3084. So that happened right here. Important prices, important areas are almost always tested. The Concierge Trade Alerts, once they're issued, they're good for the entire session. So, at the important price, important area, 3084, we initially ran up to 3090, 6-point trade. We got back below the trigger, ran up again. This time, a 10-point move. At $50 a point, that's $500 per contract traded. Then we get back below the trigger, and here's the third one. 3113 was the swing high. So 84, see, 94, 104, almost 30 points. At $50 a point, $1,500 per contract traded. And then as we discussed in the discussion group last night, from here we were looking for a pullback to the BBC, which we got. When we pulled back to the BBC from above, we expected to be good support. It was. So that gave us another trigger that ran up to 3,100. That's a 16-point move. Then we got back below the trigger. Now, here, when you enter long here, you've got to recognize that red and falling may represent resistance. Okay? So is there enough room to run? Yes, but you have to be very cautious on this one. Okay? These two little dojis printing above red and falling open the door for the leg, the retracement, and the leg. So from 30.84, we went to 31.32. That's almost 50 points at $50 a point. It's $2,500 per contract traded. So we had 1, 2, 3, 4, 5, and then number 6, tradable moves off of one alert. 6. This one here, from 30.84 up to 31.32, that's another potential 50-point move. Okay, I think this is going to be the high of the session. Could be wrong. It takes us back to, see how price has worked its way back up now to red and falling. So at this point, price has to make a decision. Buyers have to be committed enough to take us above this resistance, into the next resistance, and if they can take that out, into the next resistance. If buyers fail, if buyers are not committed enough to their positions to make that happen, then we'll roll over and we'll start building.
Yeah, John's in. That's probably John.
We'll start building legs to the downside. All right, guys, for the sake of continuity, I'll just stop and we'll talk to John, and then when he's done, I'll give you the full recap. Welcome to the show.
Hi there. Thanks. Sorry, I hope I didn't interrupt.
No, it's okay.
Okay. So, after this shellacking we got last week, things kind of turned around. So we're going up for a retest by the looks of it. This is a very, this is a typical kind of a head fake move where the market, rebounds for a retest, and it almost does it with a bigger fury or intensity than the previous. Running up to the highs, although it was pretty crazy making the highs before this last sell-off. In case you haven't mentioned it yet, there's an eclipse coming up at the end of the week on June the 21st. I would say that's a major celestial event because it's not only the summer solstice, but it's also an eclipse of the sun. That's pretty rare.
That is.
Now, the one we had 3 years ago was, around about the same time. I think it was in July, actually. And we did have a bit of a pullback around the eclipse, but then we actually went higher. We went a lot higher, because we were in a pretty strong bull market going into the end of 17 before the tax cut was announced. So an eclipse can mean, it could potentially be an acceleration of the continuity, okay, or it could mark top. And one of the things that's going on today is the oil. I was actually talking to somebody last night about we were short the oil from 39.40. We actually covered at 34.50, which was pretty amazing. And I told him I thought it would go back up to 39. It did this morning, and so far we had a pretty fast point drop, but it's going back up a bit today. I guess you mentioned the retail sales coming in around 17%.
We hadn't talked about it yet, but yes, the numbers did come in better than expected.
Right, all-time record by far, and
that same report after 9/11 was exceptionally strong as well.
Right.
Just
so
put it in historical context.
Obviously that kind of, even though there was a bit of a sell-off a while ago, it sort of dampens the likelihood of a rollover. But there's some, it feels to me like there's something out there we don't know about just yet that could tank the market. And here's the thing. If it goes down from here, if you could just put up the daily on the S&P,
This is
we
the daily
even.
S&P.
Oh, sorry. My apologies.
No worries.
This today's day, today's low is very critical because obviously if we take that out, there could be quite a devastating move down. I mean, we could come down to 2,800. That'd actually be a three-wave pullback, which would actually be constructive. Now, we're either going to have, we appear to have started a C wave. So we're going to have a failed C. A failed C would be probably down to 2,800 or maybe 2,600, and then it would go back up. I mean, if it's a full C, we're probably going to go to new lows, and nobody knows for sure whether it's going to happen or not. But you got to think about it now. Something interesting happened today. If you put up the UVXY,
Sure.
or maybe the TVIX is better actually. TVIX.
Yeah, give me a minute. I'll open up some charts for that.
Yeah. This actually hasn't happened for a long time, what I'm about to tell you today. I actually tried to come in late yesterday, but it already shut down, so I'm sorry. Sorry I didn't make it yesterday.
That's right. No worries. All right. Okay, so we got some charts, and here's the TVIX. Let me put it on a daily. There you go.
Okay, so you can't. We probably need to put it on a 30-minute, but no, keep it on the daily for the moment because this is very, very important.
Okay.
Look, what happened? You see, when we took off the first time, back in February, March. Actually, if you can squeeze it up a bit. Okay, do you see these down days right after we took off?
Mm-hmm.
See that? 2 or 3 down days, red days. I think we're having the same. This liftoff, believe it or not, is a faster and more dramatic liftoff than the last time, than preceding the crash. Okay, so I think you need to pay attention to that. Now, obviously, this setup, so we had a very dramatic liftoff. I mean, we went from like 118, 119 to 200. I mean, Jesus, we almost doubled, like in a few days on this thing, right? And now we've put in what could be, like that the previous time we rallied up, and we went down, and we've made new all-time highs since then. So, if the market is really, really strong, and this was just a pullback that we had, it was a kind of a scary pullback, that 1,800 drop in the Dow, then, you could potentially see this going down to new lows in the next week or so or more, which would probably put the market up to new highs. On the other hand, see, today, what's kind of interesting is we actually went positive today on the VIX over yesterday's close, right? Now we've given up those gains, those early gains, but that pullback.
So
see that?
Yeah.
So
what you're saying is that we went a tiny bit higher than yesterday's close.
Exactly. Now, guess what? The Dow. You know what the Dow was when that happened? It was about up 200 or up 300, and the S&P was probably up 30 or 20. So the fact that this thing went positive, and we weren't even negative on the indices, tells you there's a kind of a fear factor in developing in this thing. I mean, it actually ran up. Let's see. I mean, it went from maybe. So just going back to. So the point is this: if for any reason we sort of go back up towards 200, I think it's extremely negative for the market, because we could actually run up to 400 or 600 pretty quickly on this thing, and so I think you've got to be very much aware of the possibility of that happening, especially when you look at the way we ran up before in February, March.
Mm-hmm.
You see how we had, there was a couple of times where they had these big down days, and then next thing you know, we're on our way up again. So I would pay a lot of attention to this in the next few days. Speaking of records, I think I might have pulled off another one yesterday, well, between yesterday and today. I think I told you I've got a few people that I've been helping, and one of them, up until about a week ago, in and out of me being sick and everything, I think he put, maybe 20 grand, more than 20 grand ahead, and he's up towards 25 now because I put him in LLY. I think I mentioned Lily on the show as being a very interesting play. And I believe it's currently up $20. It gapped up this morning, and I think it's the biggest up gap in pharmaceutical history. I'm not talking about Intercept. Obviously, that's a record holder. But in terms of the big pharmas, Lilly, right, LLY, it is potentially the big. Listen, believe it or not, I think I told people, this is no easy stock to play. But I noticed yesterday there was some activity coming into this. If you could put it up.
What's the symbol again?
LLY.
LLY.
No, just one L. Just two L, sorry. I'm sorry, two L's.
Got it.
Okay, look at that. And of course the doji. That's why I got on that's why I was trying to get on the show late yesterday to tell people about this doji that was developing. And
these folks made the Dixie cup, that little cup that people used to have hanging on their wall. These little dispensers in the bathroom. I haven't seen them in years, but it wasn't uncommon to go into a bathroom and there's a little dispenser and there's all these little cups, I guess, so you rinse your mouth out after you brush your teeth or something.
So this thing is going crazy right now, and it kind of looks like it's going to make new all-time highs. But I mean, I haven't figured out the number of billions that this move represents. But for a pharmaceutical company, I think it's a record right now, an all-time record in terms of a gap, and probably in terms of the $1 billion change. So, and they do have they've got a unique vaccine or treatment type of thing they're developing right now for the COVID. But this is actually up on a breast cancer treatment. And I think we put up IMMU, if you wouldn't mind.
Okay.
Yeah, this is another breast cancer stock, and we only got in at that around 18 to 20, but it's been a pretty good performer since, and now it's starting to turn up on this news of Lilly. So I would imagine people are paying attention to that today. Now we've talked about INO.
INO, okay.
Yeah. Now, INO is a little bit more tricky. It kind of sold off today a bit, but if you can put the daily up.
This is the daily of INO.
Oh, sorry. Apologies. So it's just that it had a dip today. It looks a lot like the last dip down in the morning. So you can see that this thing could. I actually believe it's going to gap up one of these days and possibly go for a pretty big run. It's certainly acting quite well. And remember, if you put up mRNA. Yeah. Yeah, this one had, I think, as a matter of fact, see where we were in May, towards the last half of May. See that on mRNA going in? Okay. Oh, sorry. Either side of May, for late April into May. See that sort of sideways, and then it started moving up. I think that's where we are at. We're somewhere around here today on INO. In other words, there's a real possibility that something similar could happen to INO, where we gap up and it really goes crazy. Now, there's another little stock called Mesoblast. We looked at it before, MESO. Okay, this one, as you know, look, it went from $6 to 20 in a day. So this thing
This is parabolic moves, guys. This one actually ended better than most because with these parabolic moves, it usually ends up right back where it started.
Yeah,
this
the
one
fact
actually held about halfway.
Yeah, look, remember, there's 100% risk of any loss in any stock, but
that's right.
This one has, potentially less risk than others because it's been in a pretty tight range for 2 or 3 months now, and that's usually pretty constructive. But if they announce some bad news or something, obviously the stock will tank. But there's a reasonable risk-reward situation here because this happen to know a very kind of a pretty highly ranked position, and he says that he thinks that they're currently involved in treatments and it's a stem cell. They're getting better results than remdesivir, so that's kind of a certainly worth paying attention to. And I've just been waiting for this stock to kind of react, and it looks like there's a bit of reaction here since in the last few days. So again, if they announce some, remember, if you could put up Guild, G-I-L-D.
Sure. Gilead Pharmaceuticals. There we go.
Okay, I said a while ago, even though the remdesivir results have been disappointing, not as good as cracked up to be, the stock, I don't think it stays or over by any means. It's got a lot of other things going besides the COVID, and any one of these things could push the stock up. Listen, they had the chance to buy a pharmaceutical company for $5 at the beginning of the year called 47,
okay,
and they ended up paying $90 for it.
That's an interesting name, 47. There's that company 23andMe, which has to do with genetics.
Yeah, this 47 is, I think it's 47 different types of diagnosis on all these sort of
one
different
test?
treatments. Yeah.
And now that sounds like that other company that blew up a couple of years ago. That lady. Oh my
No, it's different. It's different from that altogether.
What was that company was called Theranos, right?
Theranos, yeah.
Theranos. Do they even? They were supposed to be able to give you, as you just said, a multitude of tests out of one drop of blood.
No, this isn't the blood test. This is a test of pharmaceutical therapies.
Theranos
in other words,
no longer trades. It looks like.
Right.
Okay.
This one can put up 47 to see if the chart is 47.
Let me see if anything pops up.
No, it's over. It's gone. No. Yeah, it's gone. Anyway, it went from 5 cents.
Okay.
It went from $5 to 91. I think
which company bought it?
Gilead.
Okay, Gilead did. All right, so we put Gilead back up. All right, there we go.
So no, here's the thing. If you remember, I said on the show sometime back in early April, late March, early April. I said, it might be an idea to get some calls on Gilead or even go long because they were doing a study and they stopped the study, if you remember, and that's when it opened up at around 84. See that? Or 85, 6. As it turns out, it sold off from there, but it did go up a couple of times to that level. So, that's what could happen to any one of these pharmaceutical companies that are doing these tests right now. If they get anything like halfway good results, the stock's going to jump for sure. I mean, look at check out UONE. Okay.
Oh,
that stock made an all-time high yesterday, and look at where it ran up to today. So,
be careful
in an environment where stocks with absolutely nothing going for them are getting run up every day like this.
Any idea what these folks do?
They're, I think it's a real estate company. Hang on a second. Just a second.
Now, real estate may be headed for some very troubled times, folks.
I'm sorry, it's a broadcasting company.
Oh, it's a broadcasting company. Okay.
Yeah. Yeah, there was a finance company that went up yesterday, some crazy thing. There's another one, put up WAFU, WAFU.
WAFU. Okay.
That's one of the ones that went all the way up and down again. And there was one yesterday.
And again, this one, it had the parabolic move up, but it didn't come all the way back to fill the gap. So
Right.
this did better than most parabolic moves.
Yeah.
Because they usually
Check
just go
out
right back to where they were or lower.
Yeah, NETE.
Okay. All right.
That's another one that didn't come all the way back. And then CLIR. Yeah, CLIR is one that might still be in motion, might still be in progress. This one. It's kind of.
Yeah.
Yeah. So.
Yes. The day you want to know about these kinds of companies are on this day, because on this day the train already left the station, and chasing these things, well, it's rare to see one that ends well, where after this huge gap and this thing. Now we're talking about a stock that's $3. It was yesterday. It was trading at 85 cents. Opened almost at a double today, $1.50. $1.60 would be a double, and then that $1.60 doubled up to 320. Now we're back to 289. What sort of volume is this thing trading on? Has it got high volume?
Yeah, all these stocks are high volume traders.
Okay. Yeah, because you got to be careful, guys. These folks who day trade equities, they set their sights on a company. And I'm not saying this is a pump and dump. I'm not saying that at all. But obviously there was a lot of something that caused this to happen. Okay. Now, sometimes people ask me, well, how is it that stocks gap like this? Well, when Wall Street closes at 4:30 p.m. Eastern, or at 4 p.m. Eastern, futures stop at 5, futures reopen at 6. Now, futures follow the equities, not the other way around. Because of the name futures, somebody, they see the future. Not so. They track the equities. Now, can one get ahead of the other? Yeah, that's possible. But at 3 a.m. Eastern, when London opens, traders in London are trading these stocks. What you're seeing happen here, okay, overnight, London traders, they're buying this thing, buying it, and then Wall Street opens. That's why you see this huge gap. I just want to make sure everybody understands the nature of a gap and how they come to be. Go ahead, John.
Yeah. So, I guess with the strength of this retail sales and stuff, the market's actually holding up pretty well. But I noticed the VIXs are still actually quite, we're still, they're popping up at they're kind of getting a little bit of strength in them.
Here's
right now.
VIX, just the straight VIX, then the TVIX that you like, TVIX, there it is.
Yeah. Anyway, there's a cyclical top coming in about a week or so. So, any time right now, there could be some sort, especially when you've got a lot of good news, the market is vulnerable. If it were to break down, it would definitely be very, I think it would be a devastating move. So you have to be mindful of that right now. And it feels to me like, there's a bit of divergence going on with these FANGs as well, and they took a bit of a hit early this morning. So it's by no means a kind of as strong a day as it appears actually today. There's actually quite a few stocks that are down. So,
well, our daily chart on the S&P, we understand where that resistance is coming from, and the big question today is, can we close above the high of, if we can close above the high of today's session, and the high of today's session so far in the S&P is 3156 and a quarter. If we can close at that number or above, then we know that we're going to make a run at this swing high. If we can take that out, then we've got this resistance here. I don't think that's easy resistance to get through, but eventually at some point in time the market will overcome it. Then it will be up against the all-time historic high. If over the remainder of today's session, if we trade substantially lower, then what you're looking for tonight on Globex is for price to move first back below the BBC, and then the really important area is taking out the low of yesterday's candle. If we take out the low of yesterday's candle, then that opens the window for that 50-plus point down move on the S&P E-mini futures that we talked about earlier.
Yeah. So the grains and all that are kind of off. You know, they're kind of getting whacked. The wheat was up above 500. It's broken down below 500 today. So it doesn't look like much is going on with the grains at the moment. The metals, the silver is pretty strong today. I think if you put up the gold, I think you can see that the gold is building a lot of value at higher levels. And
it's only a continuous contract, guys, on silver. We're above the BBC on the 30-minute. If we push it out to
it really looks like it's about ready to go. Actually, this thing.
This looks as much like it's ready to go as anything I've seen. If we can get a daily close above red and falling, then that takes us up to the previous swing high, which takes us up to this previous swing high, which then puts us at the $19 level, which is critical. Now, price from here is going to do one of two things. It's going to attempt to break this swing high or this swing low.
Exactly. It's an interesting point because, you know, we will, as of last week on that down day, if you remember, we were looking for a bit of a test, and I actually said if we hold 1,700 on the gold, that would be constructive. And the silver looks pretty similar. So in fact, we've had a three-way pullback on the silver. So it definitely does look like everything's lining up. It's even the platinum as well. So I really believe you're going to see a very sustained up move here, possibly even a buying stampede right ahead. You know, and another thing that's happening today that we talked about is that the bonds, in spite of the rally that caused that sell-off, they're starting to go down again, indicating that maybe the economy is getting stronger after all. So,
guys, silver, there's two windows of opportunity. A small one here, based off the daily chart, which takes us up to this trend line. Now, once we hit that trend line, the potential for resistance is good. So I would take profit there. Now you've got this resistance to deal with. Let the buyers and sellers fight it out. And if this swing high is overcome, you've got another window of opportunity before you hit that previous swing high, which should act as good resistance, at least initially on the first trip up.
Yep. So that's kind of the wrap for the day.
Well, thank you, John.
All right. Thanks very much. All the best.
Appreciate it very much. Have a great day. Okay. Everybody knows where we're on the daily on the S&P. We've covered the 30-minute. The alert was to be long 3084. In case there's anyone in the audience that did not have a chance to grab a screenshot, I'll bring it up again. See if I find it. There we go. Okay. All right. Last night's alerts. Again, the simplest way I have for doing a screenshot. I use the snipping tool. It's built into Windows 10. Hold down the left mouse button, drag it. Release the left mouse button. Now you have an image that you can right click and you can send as an email. You can copy it to your clipboard. If you copy it to your clipboard, then you can post it into Telegram. That's in case you need to send me a chart so that you can, ask a question about something specific. Okay. All right, so everybody's got that. Perfect. So from 3084, we had a move up to 3090. 6-point move in the S&P. $50 a point, $300 per contract traded. That's what the market made available. What I make available is the alert. I'm the guy in the movie theater, days of old. You arrive at the theater, the movie's already started. There's a guy with a flashlight, the usher. He shines his light at the floor, helps you into the darkened theater, and shines his light so that you don't trip over anybody's feet, so that you can find your seat and enjoy the movie, right? Okay. So the market makes these moves happen. We don't. No one does. I don't care what their website says. This is the action of real buyers and real sellers in the marketplace. It has nothing to do with the great thinkers, the great analysts, all the guys with all the talk, yakety yak. And the most stunning thing that I find when I do watch one of these financial television programs is they say what they say today, and then whatever tomorrow brings, the tune can be completely different, as if they didn't really say the stuff they said yesterday. But you see, the people tuning in today probably aren't all the same people that tuned in yesterday. And no one ever holds them accountable for what they say. Now, here, we don't make those kinds of grandiose statements. I make statements that I can live with and that I can look you in the eye tomorrow. From here, price is either going to try to take out this swing high or this swing low. If it takes out this swing high, then we're headed for the final weekly zone overhead. If it takes out this swing low, then we're headed to the weekly trading zone below. Now, whatever happens, I can still look at you tomorrow and hold my head up. There's continuity with this program. For years, we've come on the show, recorded it, put it on YouTube, and I always encourage new people, go back a few days and watch the show, go back a week and watch the show, go back a month, go back a year, because we don't change our tune. What we present is simply how markets work, without all the confusion. You see, the buying and selling of stocks is only a portion of this thing we call Wall Street. Billions and billions of dollars are spent every year on indicators and oscillators and trading methodologies and trading strategies and seminars in Vegas and all this stuff that's going to change your life, change your trading forever. But you know that doesn't really happen, does it? In fact, most of the stuff that you pay for, I mean, the guy doing the pitch, he got you into a fever, there was a fever, and you knew you couldn't live without that thing because the guy preached it well. Chances are it's in some deep, dark recess of your computer today, gathering dust. Because once you get home, you get away from the crowd, the mass hysteria. It doesn't look the same, doesn't feel the same, and typically you just go back to doing whatever you were doing before, and that thing gathers dust. Again, billions and billions of dollars a year spent on indicators, oscillators, methodologies, strategies, stuff that, quote unquote, tells the future. But you and I know, man, even though we're created in God's image, God was very selective in what he gave us the ability to do and what we can't do. The little birdies, he lets them fly. Well, the only way you and I are going to fly is if we get in an airplane, right? Mankind, was not given the ability by God to change the past or to know the future. And those two things are inextricably linked for eternity. So if we know that price, now I'm talking about things that we can know. We can't know the future. We can't say with certainty that price is going to try to break this high before it tries to break this low, or that it's going to break this high as opposed to this low. I mean, we can say it, and then if it happens, we can walk around and thump our chest and, you know, lead the hero parade. Or we can talk about reality. And reality is, no one knows, but we can tell by what price does what it's trying to do. So, with our very simple, humble methodology, we don't use stochastics or MACDs or Bollinger Bands or Keltner channels or advanced decline lines or the trend or the tricks. And trust me, people will tell you, well, then you're not a trader. If you're not using all this stuff, what you do is not trading. Okay, call it what you will. And all the things I just mentioned, if you use those things, please don't take offense, because I'm not saying they don't work. I believe they do exactly what they were created to do. And there's nothing out there that Michael and I haven't tried over the many years. And we ran out of stuff to buy or stuff to try. We started to roll our own, right? We reached a point where we realized that more stuff just wasn't the solution to the very real problem that the market represents. All this other stuff, you know, if it adds to your bottom line, then you should use it. But if it isn't, then it's only going to serve to confuse you, cause you to make irrational decisions. So, my statement is price will attempt to break this high or this low. Well, how do we know? Well, right off the bat, we're above the BBC, so that's one vote for trying to break this high. Okay. Well, so then the next question is, well, what obstacles are in the path of price that would prevent it from accomplishing the mission of taking out that high? First thing would be the weekly trading zone. Then this swing high, this huge candle from 3140, and it spilled over to the next candle down to 3060. That's over these two candles, that's 80 points, right? So this swing high right here is very important. What's that price? 3142.75. So if price is going to break that high, then it must first get above the weekly trading zone. Then it must get above this swing high. And then you've got a window of opportunity until you run into this swing high. And if price can overcome that, then it has to deal with the ultimate obstacle, which is the high of today. And if it can overcome that and get above 3160, then the race is on to the highest weekly trading zone. If price fails anywhere along the way, here, here, or here, it's going to come back to the BBC. Price always reverts to the mean, just like it did here. Okay, so if it fails anywhere along the way, it'll come back to the BBC, and if it finds good support, it'll try it again. And if it can't make it, it'll come back to the BBC and it'll try it again. It will either ultimately take it out, or price will end up below the BBC. When that happens, when price gets below this green line, well, now we know that it's trying to take out this low. So on the way down, there's an obstacle. This Important price, important area, 3084, that's an obstacle. This weekly trading zone, that's an obstacle. And then there's the ultimate obstacle itself, which is this swing low. So tomorrow we'll revisit this picture and we'll know what price managed to accomplish. Did it take out the high? Did it take out the low? Now, well, with all these obstacles overhead, I guess a fella can't trade. Well, not true. You trade from obstacle to obstacle. Get through that obstacle, now you can trade it to the next obstacle. Get through that obstacle, you trade it to the next obstacle. Rinse and repeat, as they say. So 1 trigger, 2 trigger, 3 trigger, 4, 5 trigger, 6 trigger. 6 triggers. One that you had to be careful with, because as you trigger here, you've got the support of the BBC. That's a beautiful thing. But you know that if you go long 3084, you're going to run into resistance at red and falling. Well, the good news is the distance from the entry to red and falling is 10 points. So if you're trying to take 2 points out of the move, or something, less than 10, there you go. We get to red and falling, price stumbles. 30-minute doji, 30-minute doji. Then we get a little leg, 1 candle, a retracement, 2 candles, and we come to rest on top of blue and climbing. And when we pull back to blue and climbing, we expect that to be good support. And then price rode the back of blue and climbing right up to the high of the session at 31.56 1/4. Okay? If price fails at any of these areas we discussed, gets below the BBC. Now, in Logic 247 today, we had a short opportunity. When price got below the BBC, I put the alert out, and price ran right to the target, the weekly trading zone, where it found support, and then headed back up. I couldn't put out an alert when it headed back up. Even though I knew price was heading up, we don't go long below the BBC. We only go short. We don't go short above the BBC. We only go long. Okay? All right. So that's enough about the S&P. Now, what I want you to watch as we go through the Dow, the Russell, the NQ, this is very important. The indices travel in packs. Now, a very interesting dynamic, and let me show you before I move on. S&P daily, it's all about price and red and falling. But if we bring up an NQ daily, there is no red and falling. Right? Okay. We got to pull back to the BBC. Green day, green day. Just looking to see if price can take out this swing high. This is the NQ daily. No red and falling. Okay? Blue and flat. Now, I have drawn Fibonacci price extensions from the pandemic low to the most recent swing high to the retracement low. So using just math and nothing else, 14th century math, upside potential targets, the 24% fib extension, the 38, the 50, the 62, and the 100. Okay? Learning to use this tool will help you when you find yourself in situations where you don't have a lot else to go on. Now, the highest weekly trading zone for the NQ is 1,555. So closing in on that 38% Fibonacci extension. Okay. All right, so let's go back to the Dow. Now, look at the shape of this. And look at that shape. Hopefully you see it. When I say they travel in packs, they do. Sometimes the NQ will get out in front, lead the way. Sometimes the Dow will get out in front, lead the way. Sometimes the Russell. Sometimes even the S&P. But the S&P is the bellwether, as someone once taught me. And wherever the S&P goes, ultimately, the other indexes will follow. That doesn't mean the S&P is going to go there first. It just means wherever the S&P ends up, the others will follow. So we have a big leg and a retracement to the BBC. We expect it to hold. Holds more often than it doesn't. And then a leg up to the zone, and we spiked that weekly trading zone. The next weekly zone overhead is way up at 27,470. Now, last night's alert for the Dow was to be long 25,870. $25,870. Come on. Okay. 25,870. All right. So the initial run up. Well, we had some of those small moves, just like the S&P. From 870, we ran up to 936. So that's, 60-point move at $5 a point, $300 per contract traded. Back below the trigger, and then we ran up from 870 to 980. That's 110 points at $5 a point. That's $550 per contract traded. And on this one, we didn't really get back below the trigger, but you'll notice that support held at the step line. And then once we got above blue and climbing and took out these swing highs, off we go. Okay? We didn't quite make it all the way to the zone on that leg. The move ran out of steam. You'll notice price started to walk sideways. Let me open this up so you can see it. When a move runs out of steam, price starts to walk sideways. And when your step line is on the right side of blue and climbing, okay? So we had a lot of consolidation here, and this move happened basically in one candle, right? So that's why the step line never got on the left side. The actual left side of blue and climbing goes way back to yesterday. So price, the step line has crossed over to the right side of blue and climbing on a long trade, the first red candle that closes below the step line after it crosses over. And in this case, that price is 26,140. That's your exit signal. That's the market saying, I'm headed for a pullback, potentially a reversal. You best take profit now. Okay? So that candle right there, if you were in this move up and you're hoping to get to the weekly zone, that's your final trade to target. But price sends you a little love note that says, yeah, you might want to take your profit here. We continue down to the BBC. We expect to find good support, and we did. And so from there, we get a move, from 25,970 up to red and falling at 260.90. And just like the S&P, it took two 30-minute candles to get on the other side of red and falling. And then a leg, a retracement, and a leg, just like the S&P. Right here. See it? Leg, retracement, boom. Leg, retracement, boom. So where are we at now? Well, we had a logic alert this morning on this move down to consider being short the Dow, back down to the weekly trading zone. Done. We couldn't put out a long on this candle because we're below the BBC. Now we've gotten above the BBC, we've gotten above red and falling, and we're printing a red candle. Well, okay, leg retracement. All this is another retracement to the BBC at this point. Now, we're only 4 minutes into the life of this 30-minute candle. So this 30-minute candle could touch the BBC, and then buyers come in and walk it right up to the zone. In order to get to the zone, though, these obstacles have to be overcome right here. Okay, previous swing high is always an obstacle to a move higher. Previous swing low is an obstacle to a move lower. From here, price will either break this swing high or it will break this swing low. As long as price stays above the BBC, then it's trying to break that high. If we get back below the BBC, well, then it's trying to break that low. So we had a couple triggers here. On this one, we didn't quite pull far enough back to make it an official quote-unquote trigger. But on this one, we did. Okay? All right. So what happens here, or over the next couple 30-minute candles, will determine the ultimate direction. This high or this low. Dwayne, the YBR trades have nothing at all to do with the alerts. It's not anything that's factored in. That's just a gimme trade. If it turns a certain color, you can take a trade in that direction. And if that works for you, then that's all you need. But it's just not anything that gets factored in. Because as I'm putting together an alert based on market structure, there's no way to know where the YBR will be positioned and if it's going to flash red or green. So that's kind of just a standalone thing. Now, could you on your own factor it in? Okay, price, pulls back to the alert, gets below it, it's about to trigger again, and you get the setup that comes with a YBR. Sure, of course you can do that, but it's not something that I can factor in big picture. Okay, to the Russell. Last night's alert on the Russell was to be long 1437, which is going to be right here. Come on. From 1437 to 1448, that's 11 points. At $50 a point, $550 per contract traded. That's the first move. Price gets back below the trigger, finds support at the BBC, makes another run. Then, a third time, price gets back below the trigger, makes a run, and where does it find resistance? At red and falling. This is true on a daily chart, on a 30-minute chart, on a 5-minute chart. Everything we do, every indicator, every principle, it's fluid across every market and every time frame. It's how markets work. So from here, the Russell's going to either try to break that high or break that low. And you'll know what it's trying to do based upon its relationship with the BBC. If price is above it, it's gunning for that high. If price is below it, it's gunning for that low. And with these huge moves that we get now, compared to years gone by, one 30-minute candle is usually more than sufficient to reach your goal for the day. So you print a green candle, man, if I could just get one more green candle, well, that green candle right there went from 1455 to 1463. 8 points at $50 a point. Just one more candle, please. If you're dropping, get a new candle. Boy, if I could just get one more red candle, boom, done for the day. Print green candle. Boy, if I could just get one more green candle, boom, done for the day. Okay, all right, let's go to the NQ. On the NQ, the alert was considered being long 98.65. Okay, so we trigger, put in a swing high up at 99.48, back below the trigger, high of the day, back below the trigger. We run into resistance at red and falling. That's how it works, again and again, over and over, day after day, time after time. On crude, last night's alert to be long 37.45. 37.45 is right here. And there was a $150 per contract move up to the zone overhead. Price consolidated with the zone. Then it rode the back of blue and climbing right up to the next zone. And then price pulled back, got below the trigger again, and made the run to the zone again. On gold, last night's alert, consider being short 17.18. We never got there. Price has gone, gold has gone from zone to zone, back to the zone, back to the zone. The long side on gold last night was 17.38, which it hit multiple times. Now that's only 1 point to the zone, $100 per contract. Did it once, did it twice, did it 3 times, did it 4 times, did it 5 times, trying to do it for the 6th time. Okay? All right. So that covers it. If you got any questions, please put them in the chat box. I'll be happy to answer them before I go. And before I go, it's time. Good word for the day. All right, we're going to talk about learning stuff the hard way. Life and trading have so many parallels. And most things in life, you can either take the hard approach or the easy approach. Except in trading, there's no easy button. But there is a simple button. Hebrews 11:32, and this is the first installment of what we'll talk about for a couple of days. Learning the hard way. We've all learned stuff the hard way, right? Now, nobody wants to do that, but hear me well. If you have to learn something the hard way, make sure you learn it. Because if you don't truly learn it, you'll be forced to repeat the class. When I used to do a lot of counseling, when I had 50 employees, and they all had their woes, okay? Because it was a very unique group of people. I won't go into that whole story today, but they would sit at my desk and say, I don't understand why the same thing keeps happening to me over and over. Well, the explanation is quite simple, because you keep behaving the same way. If you go down the same path, you're going to end up in the same place. If you use the same recipe, you're going to bake the same cake. If you have a fruitcake recipe, you're not going to bake an upside down pineapple cake, right? Hebrews 11:32. And what more shall I say? For time would fail me to tell of Gideon, Barak, Samson, Jephthah, of David and Samuel and the prophets. We all know the story of Samson. He had a flowing mane. A hippie. No, he wasn't a hippie, but he did have long hair. Samson had incredible potential along with nice hair. I always see him as kind of like a Fabio, but, without the, he was a manly Fabio. Samson had incredible potential, but he threw it all away. Why? You ever just wonder why? Well, there were several reasons. Number one, he failed to control his impulses. He was physically strong, but he was morally weak. He deliberately ignored God's principles, and his life became a pathetic cycle of failures. Not because he wasn't strong physically, morally. He deliberately ignored God's principles, and his life became a pathetic cycle of failures. He never learned. He kept making the same mistake over and over. For him, it was a kind of game. How close can I get to the fire without getting burned? How many times in our own life do we dance with danger, tempt fate? See how close we can get to the edge of the cliff and not fall off. Delilah, a Philistine woman, kept nagging him about the source of his strength. Give me a second. I got to send an important message. That's someone I care very much about. All right. I'm done. Now you have my undivided attention. Okay. Delilah was a Philistine woman. Now, who else? Where's the Philistine? Think for a moment. David. David and Goliath. Goliath was a Philistine. So maybe David, like right off the bat, he's not keeping maybe good company. Not trying to be racist here. I'm just saying, based on the back in the day of David, he's hanging out with a woman that culturally he shouldn't have been hanging out with. So, Delilah, a Philistine woman, kept nagging him about the source of his strength, and each time she got a little closer to the truth. Delilah kept saying, David, why are you so strong? Oh, I love your big muscles. How do you do it? How'd you get so strong? Samson was playing with temptation by even toying with her, and eventually he fell into the trap. And we, you and I, do the same thing when we say stuff like, oh, yeah, it won't hurt just this one time. Just a little bit. Right? We do it. If you're diabetic, and my grandfather was a diabetic, and I saw this play out in his life practically every meal. We finished the meal, he had a little stash under the cupboard. He'd reach back behind a chair, pop out a fistful of Little Debbie's, start passing them out. And my grandmother would slap his hand. Lindsay, you gonna run your sugar up? And his answer was always the same. Oh, one Little Debbie won't hurt. And if I have to, I'll just take another shot. See, he was on insulin. He had to give himself a shot every day. But the temptation, the craving for that forbidden fruit was so great that he was willing to shoot himself up a second time with insulin. You with me? Okay. So the next time you catch yourself saying, well, a little bit won't hurt. Okay. Well, will a lot hurt? Oh, yeah. Like my grandfather knew he couldn't eat 10 Little Debbies, but he shouldn't have been eating one. But it's hard, right? I'm not saying this stuff's easy. But God said, Jesus said, I'm going to go send you the Holy Spirit because the Holy Spirit will help you. What seems impossible to man, by the power of the Holy Spirit, you're going to find simple. Not easy. Simple. See, it's when we rely on His strength. See, if my grandfather had prayed, Jesus, help me resist this little Debbie, Jesus is not going to reach down and snatch little Debbie out of his hand. My grandfather would have to pray that prayer and then physically take the little Debbie and put it back in the stash or put it in the trash. But do you see how a disease that ultimately took his life, the solution was so simple. Not easy, simple. Huge difference. Trading is not easy, but it can be simple. And there's a huge distance between easy and simple. One's possible, the other impossible. Here's the bottom line. None of us plans to be a failure. Nobody wakes up and says, oh, I think I'm just going to totally screw my life up today beyond recognition. After I have some coffee. Right? We don't do that. But yet we do without actually saying those words. It's getting complicated. Let me try to make it simple. It comes naturally and gradually. It's a step-by-step process. As little by little we become weakened. See, when Delilah first asked Samson, why are you so strong? He didn't give her a straight answer. But as she kept nagging and needling and asking and tempting him with stuff, she was chipping away. He was getting weaker by the moment. Our whole lives don't just fall apart in one day. You can blow up an account in one day, but our lives typically don't fall apart in one day. Problems, whatever they are, they build up over a period of time. Because we refuse to learn from our mistakes. Remember, if we make a mistake, if we learn the lesson, then that's not such a bad thing. Because if you learn the lesson, that means you won't make that mistake again. At least not intentionally, on purpose. Anything can happen by accident. But my grandfather never took one of those little Debbies after dinner by accident. He wasn't walking through the kitchen and all of a sudden one of them came out of the wrapper and just jumped up in his mouth. No. Took a conscious decision on his part to reach back into the stash and unwrap it. And his eyes would just light up. Some of you know exactly what I'm talking about. Problems build up over a period of time because we refuse to learn from our mistakes. But when we make a mistake, if we learn the lesson, we don't ever have to take that class again. At least not on purpose. Now, maybe you're thinking, well, this is an area of my life I just have no control over. It's just the way I am. Well, that's the wrong answer. Isaiah 40:29 gives us the right answer. He gives power to the weak, and to those who have no might, he increases strength. Isaiah 40:29. He gives power to the weak, and to those who have no might, he increases strength. When Samson finally faced the truth, God broke his cycle of failure and gave him the power to do what he should do and made him victorious. Now, we know that Samson's story didn't end well, right? He was victorious in death. Let's you and I, let's try to get a little taste of that victory before the building comes tumbling down on top of us. Just as God broke Samson's cycle of failures and gave him the supernatural power to do what he should do, God will do the same for you when you turn to him and allow his strength to be made perfect in your weakness, in my weakness. And that's our good word for the day. Guys, if I can help you, I'll be in Telegram. If you're ready to become a part of the family, call Valerie. The number's up on the screen, 949-42-EMINI. You can also reach her support at CFRN.net. If you, in Telegram, search CFRN Client Services, you'll find her there. Remember, CFRN Passport. That's all we got. We don't have any upsells. There won't be some new indicator or oscillator that you got to buy next week to keep up with the group. You won't have to fly across the country and attend a seminar. Everything a trader needs, one low price, all under one roof. No ongoing monthly payments, no surprises. From the group training, which is our live training room every day, to the private one-on-one mentoring, which is unlimited, to the methodology, to the indicators, to the alerts, both concierge and logic. One money, one purchase, and you're done with that part of the Wall Street equation. Just imagine the freedom of knowing I don't ever have to spend another night Googling till my fingers bleed, trying to find some way to figure out how to trade these markets. Because we're going to teach you how markets work. You're going to understand what price is doing. You're going to understand what price is attempting to do. And I'm not trying to tell you you'll never be stopped out again. I'll never insult your intelligence like that. Because sometimes the market changes its mind midstream. Well, how does the market do that? Simple. The move started with buyers being very committed to their position. But then their resolve weakened and sellers pounced. So price, before it was able to take out that swing high, swung in the other direction. And that's why you use a hard stop, because you never know when that's going to happen. But if you decide to make a home here with us, 2 weeks into this, maybe less, you'll be able to look at any chart, any time frame, any market, and know who has the ball, buyers or sellers. What's their objective? What obstacles are present on the way to achieving that objective? Never again will you rely on some guru to tell you when to get in or when to get out. No more tip sheets, no more seminars. Everything that you need under one roof, one money. Okay? Now, there's a lot of stuff out there that's really sophisticated, which is a fancy term for complicated and convoluted. And there's some really expensive stuff. $20,000, $30,000, $40,000, $50,000. Do you know how many of those $30,000, $40,000, $50,000 students we have right now? A lot. And guess what they're learning for the first time? After all the years, all the time, all the treasure, they're finally actually learning how markets work, and they're learning how to trade. And I'm not going to send you to a web page filled with testimonials. I'm going to tell you, go hang out with our traders in the discussion group. Let them tell you. There's no reason you should trust me. I'm just another disembodied voice on the internet. Now, once you get to know me, you might like me. I don't know. But if you become a part of the family, you and I will be spending a lot of time together in one-on-one mentoring sessions, so we'll get to know each other. Chances are we'll build a relationship. Ball's in your court. If you've had enough, if you're ready to go from hard to simple, not easy, call Valerie, 949-42-EMINI, support@cfrn.net, and just say, Valerie, I'm sick and tired of being sick and tired. Would you please send me a spec sheet and a price sheet? And then I'll see you on the internet. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. I found my bell. Actually, it's my backup bell, but I think the computer guy pocketed my bell. You didn't hear that from me.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.